Hiring public is here, so let's get started. The July 28th meeting of the Santa Barbara City Council Finance Committee will now come to order, and seeing no members of the public, I will close public comment and go to the first item. Ms. Nemes.
Good afternoon, Chair Francisco, committee members. I am Julie Nemes, the Treasury Manager for the Finance Department, and we have a very short agenda today, just one item, the quarterly investment report for June 30th, 2015. I'll be going over about 5 items today. First, I'll be going over the current and future interest rate environment. Second, the city's investment strategy and approach. Third, some long-term trends, both on earnings and interest rates. Fourth, the benchmark comparisons. And lastly, the quarterly investment performance and activity. First, a little on the interest rate environment. The Treasury rates continue to perform at very low levels, but we did see that they slightly increased from March 31st, 2015. We do think it's possible the interest rates will increase within the calendar year or maybe early 2016, but we also wanted to point out that it'll be several years before we'll see a material benefit to the city, because we have to wait till treasuries and investments mature or are called before we can invest back into the market. So there is that time lag. The city's investment strategy and approach, I wanted to point out that first of all, our objective really is safety first, then liquidity, then yield. And we try to maintain a steady maturity over a 5-year period. Really, that's to make sure that we have adequate liquidity to pay our bills. As I mentioned at third quarter, we had some very large purchases, primarily related to the drought. We had a very large water purchase just in third quarter that was about $3 million. And by having this 5-year ladder, it allows us to make those payments and also ensure that we're not having to invest too heavily in a bad interest rate environment. I also wanted to point out that we did have some uncertainty related to the loan for the desal plant and some uncertainty regarding the reimbursements from the state, and that all happened in the fourth quarter. Due to that, we wanted to increase our cash on hand, and we did not make any investment activity in the first couple months of the quarter. However, those loan terms were determined in June or May-June period, so we were able to invest in June. So we invested about $10 million in June 2015. This chart shows some key rates and the 4-year trend for those key rates. I wanted to point out a couple things here. We are showing about the 5-year note, the 2-year note, the city portfolio, LAIF, also the 90-day T-bill. And what I wanted to point out here is that a couple of these rates are looking like they're slightly going up. Some are leveling off. The city has been decreasing, and now they look stable. I think overall what this shows to us is that it looks like things have finally bottomed out. They are kind of leveling off and hopefully going in the right direction, going up. It's always possible they can go back down, but we are hopeful that they're now starting to go back up. The other thing I wanted to point out, as I mentioned earlier, that the 5-year and the 2-year are showing some slight increases. The 5-year is very slight. And that the city portfolio is stable. It hasn't increased yet, and that's due to that time lag. It takes us time to invest back into the market. So it'll be a couple years before we will see any increases if the increases with the 5-year and 2-year continue. This graph is showing the historical earnings for the city portfolio. The red line is the interest earnings, and the blue line is the portfolio rate. This should look familiar. We went over this at third quarter. I hate to point it out again, but in 2001, we were earning about $8 million on a 6% interest rate on a $143 million portfolio. And in 2015, a little less than $2 million on a 1.1% interest rate on a $170 million portfolio. So it just shows how much the city is impacted on these decreased interest rates. What's important here with this chart is that this is a comparison on the city's portfolio rate to the 5-year Treasury note. And what you'll see is that the city really does trend with the 5-year note. And so if you saw a very big difference between the trends between the city portfolio rate and the 5-year note, then that would cause us to have to look into it further. It should always trend at the same time. But there is going to be that time lag. So you'll notice that the 5-year note is just slightly going up now at the end of 2015. So it'll be a couple years before you would see our portfolio rate go up. But if you did see any big discrepancies, then we would need to look at it further because that should trend the same way. As to the quarter performance, the portfolio yield did slightly go down for the fourth quarter. It went from about 1.207% to 1.158%. This resulted in total interest earned of about $456,000. That was about $17,000 less than the prior quarter, and the general fund portion was about $129,000. This is a summary of the investment activity for the quarter. As I mentioned earlier, we did not invest in the first couple months of the quarter, but we did invest $10 million in June. So this first part is the purchases we made in June, about $10 million. We had $15 million that were called in investments, and a little over $4 million matured. That includes $139,000 of the semi-annual principal payment for the airport note. What this overall, what this means is about $9 million was returned to our cash balance. This is this shows our portfolio balance at June 30, and what I wanted to point out here is that compared to March 31st, at June 30, there's only about a $500,000 difference in our total portfolio balance, but the main difference is in the different items. So we show about $9 million less in federal agency issues and $9 million more in what we call our liquid balance. That would be our checking account and our LAIF. And that's due to, we had seen a pretty significant decrease in our checking account due to some of those large purchases, the water purchases. And so we had mentioned at third quarter and fourth quarter, we were looking to reinstate our cash balance. And that's what we did. And also that uncertainty related to the loan terms for desal. We also increased our cash balance, not knowing how that was going to turn out. Now that everything has been finalized, we are looking to reinvest. And as more securities mature or are called, we'll be reinvesting those as well. And lastly, we're just looking for Finance Committee's recommendation to recommend to Council accept and approve the fourth quarter investment report and fiscal agent report. And I'm happy to take any questions as well.
Thank you, Ms. Nemes. Any questions from the committee members?
No.
Okay, I would entertain a motion to the effect suggested.
So moved. Second.
All those in favor?
Aye.
Aye. Meeting adjourned. Thank you.